Julian Emanuel of Evercore writing, although valuations remain extended and market leadership is in flux, the hallmarks of the end of a bull market are not present. Julian joins us now for more. Julian, good morning.
Good morning.
What are the ingredients needed for the end of a bull market?
So the first is signs of a recession. That is the most typical top. And, you know, as choppy as the data is and as much of the negatives that you can unpack, you know, the fact is we had a strong jobs report. And then the others would be either a Fed hiking rates, which no way, no how, no set of economic data will that happen prior to the midterms at the very earliest. Pressure on the long end. I mean, I think as investors, maybe the biggest surprise is how incredibly sedate U.S. 10-year yields have been when the rest of the world's yields have been exploding higher for months and months now. And then, of course, the last one, and the one that we think is going to be seen at some point in this cycle, is really true investor FOMO driving, you know, palpable overvaluation along with a very substantial capital market surge. And from our point of view, the FOMO over the last 2 months has been anywhere but stocks. It's been in gold and silver, and you see what's happened to gold and silver in the last several weeks.
Well, let's focus on stocks. Is there some FOMO in staples?
It's extraordinary. It's absolutely extraordinary. And if you think about year to date, value outperforming, which isn't necessarily a positive look on a go-forward basis for markets. Staples screaming higher, and I would characterize it as FOMO, particularly when you see, you know, snack food price cuts in front of the Super Bowl driving stocks markedly higher. You know, good on them. But also financials underperforming at the same time. Extraordinary. That message tends to say recession ahead, but actually there's a much more nuanced story. It is really a manifestation of this AI disruption trade.